All right, today is October 12, 2014. Hope everybody's enjoying the weekend. I want to take a look at the market and see, where is it headed. As you recall, we saw the Dow Jones Industrial made a new all-time high back in September 19, and ever since that day, the market have been retreated downward, and we're basically saying that back at the 19th of September, that was basically putting a turning point. And if you have not read my post titled "The Chronology of the Turning Point" in my blog, you might want to go back and go and take a look at that, because it's kind of describe some of the event that leading to that turning point to the September 19, and also some of the price action that we saw recently that was kind of described in that post there. So kind of give you some idea of what to prepare. So some of you that have read that probably wasn't too surprised to see the choppiness and the violent move of the market in the past couple of weeks. But for those that did not have a chance to read it or wasn't aware of it, then you might want to go back, go and take a look at it. Although right now it's all, water under the bridge. It's not going to help you anymore, but it does give you some insight, and maybe it help you prepare, be a little bit more prepared in the future. So, but essentially, it's all up to you. I mean, I just post those things to kind of highlight what I see. And essentially, right now, the market is, making a change, from this particular turning point. Now, there's people that call this a top or whatever. To me, it really doesn't matter. Okay, whatever you want to call it. I call it as a turning point. Essentially, what it does is it's basically indicating that it is changing from a prevailing trend, which is up since March 2009, to a new trend, which is down, and right now is in the process of establishing that trend. Now, I could be wrong about this turning point, and the only way that I will know that I'm wrong is when the market come back up and make a new all-time high. So until then, I will stay with my point of view that September 19 is a turning point, and that's the day when the music stopped. Okay, so time will tell, right? Nobody have a crystal ball, and nothing is infallible. Okay, like I said to many times, we all guessing. It's just that sometimes, some people have a different, set of tools to make that guess, to make a better guess than the other guys. Right. But a lot of people is basically still looking for that top forming process. Okay, and to me, it's kind of ludicrous. What we are not looking for a top forming process. If we are looking for a top forming process, then basically those people are saying that we're going to see a higher high, essentially another new all-time high. But if we're looking for a process of, such as breaking down the moving average, breaking down certain support level, that's what we call a top confirmation. Right? It's confirming that the 19th of September was basically the turning point. Right? And as I said in some of the posts, that by the time that you see that confirmation, a lot of the stock already have incurred significant loss, or they have pulled back, 20, 30% already. And you can see some of those stock, if you go back and take a look at some of the energy sectors, okay, even some of the tech sector, you could see, even before September 19, they already start rolling over. And a lot of time, many times I have stated, when people was looking at calling top before the Dow hit an all-time high, I said the market won't top until the Dow Jones 30 has topped. Okay, so but hey, that's only my point of view. I mean, there are other people's opinion. So everybody have their prerogative and have their opinion. So in any way, with all this said, let's take a look at the market. And right now, essentially, I am still looking forward to continue to make this choppiness and continue to establish this trend. So right now we haven't seen a clear trend yet that what I said, to establish this orderly trading direction. Okay, that that little zigzag, going downward instead of going upward. So in the near term, I'm basically looking at a couple scenario. So before I get on, let me go back and do a little bit more of a definition of semantic. Okay, right? And I said many times that we leave a bias at the door when we come into the market. Okay, now that doesn't mean that we shouldn't come into a market with scenario. There is a subtle difference between bias and scenario. right? The bias is that we expect something to happen. Scenario is something that we prepare to what it might happen. Right. Since it's football season, let me use analogies of, the offense and defense, and we are the defense, and the market is the offense. Right. Every game plan that we prepare, we take a look at the opponents, the formation that they line up, and each formation, there's a couple options for them to how to execute that play. Okay, they might be lining up on a formation that could have two scenario. One is that they're running, run the running back right up the middle, or the other one, the scenario is that they could roll out the quarterback and do, maybe a scramble or throw a little bit of a short pass or something like that. So we basically prepare, as a defense, when we see those type of formation being lined up by the offense, we sort of prepare to keep an eye out on those possible scenario. And when the play get executed, then we see which scenario that the offense decided to execute, then we adjust our defense accordingly to, to defend that particular play. Right? So it's the same thing as in the market, and that's what we call scenario. We don't say, well, it's still in two, so we know that they're going to pound it up in the middle. So we're just going to pack it up, line up right up against the line and try to stop that run up in the middle. Right? I mean, that is a bias because we already decided that is what they're going to do. And it's the same thing if we're coming into the market, they say the market is going to do this, so I'm going to do that tomorrow. That is a wrong game plan. You have to go in with a mindset that we're going to prepare the possibility of the market, what the market might do, right? Because anything is possible, right? Who say that, it has to do this or it has to do that? Even the scenario that we put together, it might not even come into play at all, right? So let's not try to be, too strict with our game plan to say the market has to do that. Okay, the market doesn't have to do anything. Okay, it's gonna do whatever it's gonna do. Right. So with that said, now we got rid of all the semantic. Let's get on and look into the market here. And then starting with the Dow Jones Industrial, see that here's some support, potential support somewhere around the 16,000, 370, that area. Now I'm gonna just draw some ballpark number. If you want some, some precise number, you could go and look at the chart and look at these pivot level. I'm just going to give you some idea, and besides, if if you follow me on Twitter doing the market hour, then all the time I put up the intraday chart that kind of highlights some of the level that we'll be watching, for that particular day, and those probably get a little bit more precise. So you might want to do that if you are looking for that type of precision in terms of the numbers. But right now we're essentially looking at the possibility. So let's take a look at a couple possibility or scenario how the Dow Jones Industrial might play out, right? Because if we look at this, this one possibility is this head and shoulder that a lot of people is keeping an eye on, right? And also remember, what is obvious, right? The market never does the obvious, okay? Right? So bear that in mind. So the other thing, this first is this scenario, this head and shoulder pattern, right? Here's the baseline, right? So maybe we come back up and hit some level up here and then break this, and then we do a little bearish move and get it down to maybe somewhere around here, okay? Right? Then the other scenario is that it could do this, right? It could just come, break down, right? Okay, and then come back and we test this, this support here that turned into resistance. Then it come back down. So now we set up a bear flag, and then we could do a major move of this bear flag, right? Okay, and then get it down to somewhere down here, right? Then the other scenario that might not be probable, but anything is possible, right? Okay, anything is possible is that it could come down, right? Let's say it could come down here, come back, get a little bounce, then set up a bull flag, right? And take out this all-time high and put in a new all-time high. That's a possibility. That is not out of the question because anything is possible. But is it probable at this particular time? Probably not. It's probably more probable of clicking down, right, than try to come back up. But again, do not, abandon any possibility. But there's always that possibility that we have to keep an eye out for, right? Okay, so that's basically what I'm talking about on the Dow Jones Industrial. Okay, now so let's take a look at the S&P 500. Okay, so so we got some little more of these pivot line on the S&P 500. As you can see, that the S&P 500 did not close at a new all-time high on the 19th. It closed with a new all-time high on the previous day, which is the 18th. Okay, so again, right now it's coming down to this particular level, somewhere around this 1908 area. Okay, so what could we expect? Could we expect it to bounce next week, or could we expect it to go down and then continue until we find some some support level? Well, again, it's a similar type of scenario that I just went to with the Dow Jones, right? Because one is that you could do this, get a this head and shoulder pattern, right? And the other one is that it could come down and then retest this particular level as resistant, and instead of a bear flag, I mean, and then come down, right? Then the other scenario is that it could come down and come back up, make an all-time high with a bull flag, right? Okay. Now there's one other scenario that one of my fellow trader and a follower that trade Thunder Forever, he put up this particular chart here and give that little scenario of a head and shoulder on the S&P. Basically, he put that up for the SPY. Right? That's another possibility. Basically he's expecting it to maybe break down and then come back up and try to form this head and shoulder. My version was basically it won't come up to form this head and shoulder, but instead it formed that little bit of a bear flag, right? Remember this, this right here, right? This bear flag here. Okay. So if we want to take a look at, to say, what are some of these levels? Well, let's go take a look, right? Okay. If we say it's going to come down here, right? Let's say, for example, we're looking for a head and shoulder pattern. All right. So I'm going to resort to my little Fibonacci retracement tool and get some level. Okay, a lot of people might be thinking that maybe come back up to that's 1988 or the 1958. Right? The thing is, it could come up. This head and shoulder, maybe this right shoulder could come up to this 1958 level, right? Then it break, right? So we basically have this, left shoulder, the head, and the right shoulder, right? Or it could come up to this, 1988 level, and then break. Right? Those are two possibilities. Right? So, but the other possibility is let's get a little bit more technical. Right? Don't guess. Right? Although these are not guessing numbers, these are basically pivot numbers. Right? Yeah. Okay. But let's use the Fibonacci retracement tool. So let's say we do this, and you can see there's a 50% retracement here, somewhere around this 1965. Right? And here's the 61.8, somewhere around this 1950. Right? So the possibility is it could come down, right? We trace back up to 618 and then break, right? So that's one possibility. Or it could come up and retrace, up to 50 and then break, right? Now, is that a possibility that it could come up to this 38.2 and then retrace? Yeah, but then it wouldn't be, I wouldn't be looking for this head and shoulder formation here if you come up to this 38%. But here's what I'd be looking at, right? For those people that still have that long bias is that bull flag that I'm talking about, right? Okay, because this is the retracement zone. When we get up to this point, then we're basically looking for to see could we retrace and bounce off to the 618 and then take it out and take out the previous high and retrace back up. Okay, so that's one. Those are the possibility. Right. And that's why, when I say, 1988 might not be too probable because, you can see that it's, somewhere in that 20-25% retracement level, which is not the common, for, at a point that, or more like an inflection point or anything like that. So that's the reason why I'm, kind of a little bit more of looking at maybe at that one, 1951 or 1964, so which is in between somewhere around this 1958 level, right? Okay, so that's the possibility. And then if it come down, let's say for example, if it come down and it come back up on this scenario, then the level that I'll probably be looking at is, because if it's come down at this level here, this is kind of too shallow at this, I think it's 1885, 1890 or something like that. Let's see, what that level is. Okay, yeah, so it's like 1896, 1895. But more likely, that what they're going to do is probably come down to this 127, which is somewhere around the 1880, 1878 level, right? Then it come back up and come down, right? But what I'm seeing is because there is a level, see these price congestion here. Okay, so we probably will see a little bit more steeper decline before we get a little bounce and maybe get down to this, 1862, this level here. So essentially it will be somewhere in between. So I wouldn't be surprised seeing something like this, that's 1872, 1875-ish type of level before we get a little bounce. And then we see this scenario of, coming up and then come down, right? Okay. So essentially, then what are we looking at in terms of target? Okay, the target is somewhere around this 1800, right? Because if we're doing a major move, right, okay, of this head and shoulder pattern, let's say, right, okay, that's what we're looking at. And if we're doing a, let's say a, bear flag, right, then we could look at this thing here. So if I do this, a bear flag come down, we trace this level here, right, between, somewhere around the 1872, right, come back up here, right, so 80% is somewhere around the 1790, which is pretty close to the same retracement point as the head and shoulder pattern. And if we retrace, major move to 100%, then we're talking about 1760, which is close to this, low down here. Okay, so those are some of the numbers for the S&P 500 and some of the possible scenario. All right. So, but if you want to look at on the upside, then just go and practice and join some of these lines, and then do the little zigzag, coming up to these 38.2s, moving it down to 618, and then pop it up. Okay. So, and take a quick look at the Nasdaq 100. You can see the Nasdaq 100 again. We're seeing a little bit breakdown. We're probably looking at this to break down somewhere around the 3850, and then again, this scenario probably, it could also play out. Right? It could also play out as a little bit head and shoulder pattern. Right? That's always a possibility. Or there's little retracement on a bear flag. Okay, you see some of the levels that I'm looking at, for possible support, and here's some of these resistance, basically retracing it back. Okay, and then you can look at the Russell 2000. The Russell is really nasty. Right, I mean, it's already pretty much have broken down, and a lot of people basically was kind of waiting for it to bounce, and you see that it's kind of, came all the way down and broke this 1079, so, and everybody was looking for this type of support here, somewhere around the 1092, and then at the 1079, that 1080 area, and last week on Friday, it just, they just took it down. So right now we're essentially looking for a little bit of, maybe hopefully it could find some support down here at the 1040 area, and maybe we'll get a little bounce back up. But again, the trend is pretty much sort of, been, establishing it on the downside. Okay, so basically that's a little bit look of the market. I gave you a little bit more detail on the S&P. And if you want to trade the SPY, the spider, you basically could, take that and translate that into the SPY, because the price pattern is very similar. Then you could go through the exercise and do all these scenarios and then get some projected value. So, but I will post some intraday value during the trading hour, or right before the open, or shortly after the open on Twitter. So if you want to follow that, then I suggest that you come and take a look at the at my Twitter account. And in addition to that, go and to my blog and take a look at some of the recent posts. Might get some idea and give you a little bit more preparedness of, what to prepare in the coming week. So, hopefully you haven't been cut too badly. I think it's an ideal market for day trading. So unless you're a day trader, I know many of you is more of a swing trader or even a trend trading. So, and highly recommend that you scale down your position. Maybe take a look at that. Possibility of scaling down your position, and just take your cash and move to the sideline. Let that settle a little bit. And I know a lot of people is more long oriented as well. So the last thing you want to do is to buy the dip, because basically we are in a reprogramming process. Okay, we are basically what I call the reprogramming is just like a rehab, right? For the last couple of years, buying every dip seems to be working. So right now we basically is correcting that and changing the mindset. Okay, and in order to change the mindset of people who say, no longer good to buy the dip is to, every time that they buy, they have to incur a little bit of pain, and that's where you get chopped. Right? So pretty soon it's basically back, we will reverse that. We're going to be selling the whip, okay, not buying the dip, the dip. We're going to be selling the whip, instead of buying on the bounce of the support, we'll be, shorting it on the, off the resistance, right? Okay, so those are the type of strategy that have to keep in mind when a market is on a downtrend, and that's why it's important to know, right, to have some idea, the state of the market. It's not that the individual price action of individual stock won't give you the alert. If you have a adequate trading plan and a good risk management plan, you will get stop out and you won't get hurt even with these violent, market move. But the thing is, knowing where, what state of the market is, it kind of allow you to adjust your strategy and employ the proper strategy. Yeah, on an uptrend market, you buy every dip, but on a downtrend market, you sell every rip. You don't go buy every dip, because if you're buying a dip, you'll be walking into a bull, into a bull trap. Right. So that's the reason why, you need to have some idea what state of the market is in. Okay, so hopefully I give you some, a little bit more information for you to assess how you should manage your risk, and how to, participate in the market accordingly. So good luck on your trading next week.